Have you ever looked at the financial markets, especially crypto, and just thought, wow, this is complex. Wished you could navigate it like a pro, but, without spending years becoming one. Algorithmic trading seems like the answer sometimes, right? But then you get hit with this whole new wave of jargon and tech trying to figure out the systems themselves. Well, today we're doing a deep dive into one of these systems. It's an advanced algorithmic trading platform called DXPR. So our mission here is pretty straightforward. We've got a pile of info on Dexpro, its core tech, how it manages capital intelligently, what it does in the futures market, all that stuff. We're going to pull out the really important bits, the nuggets. You walk away feeling like you get it, and maybe, just maybe, a little surprised at what automated trading can actually do now.
Exactly. And understanding something like Dexpro is valuable for you, even if you never use it. It's basically presented as a tool designed to cut through market noise, automate these really complex decisions. So by unpacking how it works, we can shed light on some key ideas in automated trading overall. Kind of gives you a framework for what's coming next in fintech.
Okay, let's get into it then. We know it's advanced, but what is Dexpro, fundamentally? So, at its heart, Dexpro is described as the top-tier version of the bull trading BOT system. Its whole point is integrating AI directly into automated trading on centralized exchanges, CEXs. Think of it like an ultra-efficient execution center. That's the term they use. It tries to grab profit from every little market wiggle, all without needing you to step in. What's interesting is its logic. It's adaptable, but also, aggressive. Optimized specifically for bull runs and those high volatility moments where the big swings happen.
Right, and that no human intervention part. For a user, that means it reacts way faster than a person could. It takes the emotion right out of trading. And it's not just one simple AI model doing the work. The sources say it's a hybrid composition. Multiple models working together. You've got things like recurrent neural networks, RNNs, which are great for spotting patterns over time and market behavior, learning from past movements to predict shifts. Then there are decision trees, which help it make really fast entry and exit calls, like quick filters. And also reinforcement learning models that actually learn from your successful trade history to fine-tune things. So the question becomes, how does this hybrid approach make it tougher, more robust? Well, it means you've got multiple layers, checking things, adapting. It's less likely to fail just because one part misreads something.
Okay, so multiple AI brains working together sounds powerful, but what does that actually do day to day? Let's look at some specific functions because these really show it in action. First, there's something called Intelligent Trend Analysis, ATI. It spots micro trends on those tiny 1-minute to 5-minute charts, and it uses cross signals, meaning it checks multiple indicators before deciding, which should mean fewer false alarms. Then there's high frequency execution, HFE. This is where it gets wild. It operates in real time, latency under 1 second, they say, allows for dozens of daily operations if the market's busy. Wow, less than a second. That speed sounds amazing for catching quick moves, but how does it handle the risk? What about slippage or sudden market crashes with that speed?
That's a really key question. The speed is an edge, definitely, but it's balanced by other systems. You've got dynamic capital management, GDC, which shifts your capital around based on risk, focusing on what's working. And what's really fascinating here is how these pieces all work together. It creates this self-regulating system. So imagine some big news hits, market goes crazy, a basic bot might just freeze or lose big. But DXPro has an impact news filter. It sees the event, evaluates it, and changes how it trades. It might even trigger the anti-dump protection system, detects a sharp drop, and goes into standby, like a partial hibernation, to protect your capital before the worst happens. And then when things calm down, the automatic post-correction reactivation kicks it back into gear. You don't have to do anything. It's like having a super responsive risk manager built in.
That sounds pretty comprehensive, proactive even, definitely reassuring. But what about the actual money? How does DXPro keep our funds secure and under our control?
Yeah, security is obviously huge. They tackle it a few ways. First, it's non-custodial. The bot connects to your exchange, Binance, Bybit, KuCoin, OKX, those big ones, through a secure API. Your money always stays on your exchange account. DXPro never holds it.
Okay, that's important.
Second, credential protection. It never asks for your private keys, only public API keys, and specifically ones with trading permissions only, not withdrawal.
Got it.
And finally, there's an automatic disconnection feature. If it spots weird price action or, crucially, unauthorized withdrawals on the exchange side, it just pauses everything, goes into hibernation mode. Big picture, these are all about lowering your stress, right?
Yeah.
Preventing nightmare scenarios by keeping tight control over where the money is and what the bot can actually do.
Okay, so funds are safe, systems protected, but how does it actually decide how to trade once it's running? That brings us to these operation levels. These levels seem to define the AI's whole approach, how long trades stay open, the profit target, how aggressive it is getting in and out, and crucially, they mention these are user configurable. You pick one when you set it up.
Exactly. When it spots a potential trade, it doesn't just dump the whole allocated amount in at once. That's key. Instead, it divides that amount into up to 5 progressive levels. They call them intelligent execution zones. And these aren't just random points. They're calculated based on things like technical retracements, think Fibonacci levels, RSI, EMAs, plus historical volatility, order book depth, volume, liquidity, a whole mix. It's not just looking at one indicator, but like seeing an RSI signal and hitting a key Fibonacci level at the same time to pinpoint better entries. This multi-level thing is core to its risk management on entry.
All right, let's break down that standard structure, levels 1 to 5. Level 1 is the base entry. 20% of the capital assigned for that trade goes in first. Then, if the price dips, level 2 confirmation puts in another 20% if it drops maybe 1% to 2%. Level 3 accumulation zone, another 20% if it drops further, say 2% to 3.5%. Level 4 opportunity level, getting more aggressive now, another 20% if the drop continues. And level 5, maximum correction, the last 20% goes in right before it expects a technical bounce back. Now, here's the really important part they mention. Each level has its own take profit target, but they can also close altogether if the average buy price across all levels allows for an overall profit target to be hit.
And using these levels gives you some real advantages. First, it automatically averages your entry price down. Huge benefit. Minimizes buying right at the top. Second, it helps maximize profit from rebounds. If it drops, you buy more. Then when it bounces, those lower buys make more profit. It also cuts the risk if the first entry was maybe a bit off because you haven't put all your capital in yet. Controls risk through partial investment. It's basically an automated dollar cost averaging approach, but importantly, it closes based on hitting a profit target, not just after a set amount of time. So unlike some DCA bots that might close after, say, 24 hours regardless, Dexpro waits until its calculated profit goal is met for that whole multi-level position. More focused on maximizing the return for that specific trade.
Okay, let's use their example to make it clearer. Say you assign $500 for Solana, SoliCDT. Dexpro sees a potential reversal. It might buy across several levels as the price dips slightly, maybe averaging your purchase price to around $134.10. The system sets a take profit target around $136.11. If the price then bounces up to, say, $136.50, boom, the bot closes the entire multi-level operation, all the entries for an overall profit. And they also mention this multi-level idea works for selling too. Allows for staggered selling, taking partial profits, which can reduce slippage, that difference between expected and actual fill price, and helps adjust profits if the market's shaky. Okay, now let's talk about those 3 main user choices for operation levels. These really let you tailor it to your style. First is fast profit, quick profit. The goal here is simple. Get in, get out, grab small consistent gains, like bit 0.4% to 0.8% profit per trade. Average time in a trade, just 5 minutes to maybe 2 hours. So lots of trades per day. Ideal if you're impatient, have a smaller account, or just want that constant flow of USDT. Then there's Rocky Trader, balanced beginner. This aims for moderate profits over a medium time frame. Think security plus efficiency. Profit targets are higher, maybe 1% to 2%. Trades last longer, 4 hours to maybe 2 days. Medium frequency. Perfect if you're newer and want sustainable results without huge risks. And finally, Holder Trader, the intelligent HO dealer. Objective: keep trades open longer, capture bigger market moves. Here you're looking at profit margins of 2.5% to 6%, maybe even more. Trades can last from a day up to 10 days, much lower frequency, better for patient folks, larger capital, medium to long-term view.
Yeah, and what's really neat is how this caters to different personalities, right? Different risk appetites, different time horizons. It's like picking a trading style for the bot. If you look at the trade-offs, fast profit, low risk per trade, but commissions add up because it trades so much. Rocky Trader, medium risk, medium commissions. Holder Trader aims higher per trade, keeps risk controlled, lower commissions because fewer trades. It really lays out how you can match the bot's activity to what you're comfortable with, risk versus reward.
So what does that mean for you choosing one? Well, the sources suggest if you're new, small capital. Maybe start with fast profit to turn over capital quickly, learn the ropes. Beginner, want balance. Rocky Trader is probably the way to go. Protects capital, aims for steady gains. Experienced, got more capital to work with. Holder Trader might be your thing, aiming for those bigger wins per trade. Good for accumulation.
Right. And you also want to think about the market itself. Fast profit is apparently good in sideways or choppy markets, catching tiny moves. Rocky Trader works well when there's moderate volatility, but maybe no huge news expected. And Holder Trader really shines in clear bullish trends or after big market drops when rebounds are likely. It makes you think, doesn't it?
how combining your own profile with these market condition hints really optimizes things. It ensures the bot isn't just trading blindly, but is positioned for what the market's actually doing.
Exactly. And that brings us to what they call total synergy. It's the idea that combining these strategic levels, fast, rocky, holder, with those technical entry levels, level 1 to 5, creates this doubly intelligent system. It adjusts the trade size, the timing, the profit goal, all based on your settings and what the market's doing right now. It's not just set and forget, it's adaptive. Okay, let's switch gears a bit to capital management. How does Dexpro handle the budget? It uses two main settings, MIO, that's maximum investment per order, and MOA, maximum open operations. MIO is pretty simple. It's the cap on how much capital the bot can put into a single trade. If you have $500 total, MIO at 20%, it won't open a trade for more than $100. MOA is the limit on how many trades can be open at the same time. MOA week 3 means it runs a maximum of 3 trades in parallel. It has to close one before opening another if it's at the limit.
Yeah, and what's really clever is how MIO and MOA work together. It's a whole process. Analysis, checks your balance, applies MIO. Selection, picks the best-looking pairs. Distribution, allocates capital based on MOA. Execution, opens trades up to those limits. Control, constantly checks not to exceed limits. And optimization, when a trade closes, that capital is freed up and immediately reallocated based on the MIO for the next opportunity. It's designed to keep your capital working as hard as possible efficiently without overexposing your account, or at least smart allocation.
Let's walk through a futures mode example to make it really concrete. Say $1,000 USDT balance. You set MIO at 25%, MOA at 2. You're using 5x leverage and fast profit mode. Okay, the breakdown. MIO is 25% of $1,000, so Dexpro uses $250 per trade. MOA is 2, so it opens 2 trades simultaneously, each using $250. Now add the 5x leverage. That $250 real capital controls $1,250 worth of the asset in each trade. So your total simultaneous market exposure is $2,500 and $250 by 2. But crucially, you've only committed $550 by 2 of your actual capital. The advantage, you're using moderate capital, but getting high order rotation thanks to fast profit with a lower risk of being massively over-leveraged.
And it's smart because the MIO and MOA recommendations actually change depending on which operation level you pick. Like fast profit, they suggest low MIO, 10 to 25%, but high MOA, 3 to 6 trades open. Makes sense for quick scalping, but holder trader, they suggest high MIO, 35 to 50%, but low MOA, just 1 or 2 trades open, better for holding larger positions longer. How does this dynamic adjustment really fine-tune the risk return for each style? It basically aligns the capital deployment strategy directly with the risk profile and time horizon of the mode you chose. Very tailored.
Dexpro also has an intelligent protection system tied to MIO-MOA. If it hits the MOA limit, no new trades open. If the market gets super volatile, it automatically lowers the MIO value to reduce risk exposure. And specifically for futures, it recommends using lower MIO and limiting MOA to avoid getting overextended with leverage, a vital safety feature there. Okay, let's zoom in on the futures market advantages. Dexpro is built for both spot and futures, works with Binance futures, Bybit, KuCoin futures, etc., and handles both cross and isolated margin.
All right, the futures advantages are pretty compelling. First, access to bidirectional gains. It can automatically go long or short. This is huge, especially with fast profit, allowing leveraged scalping in either direction. Big edge over long-only bots. Second, capital optimization with leverage. You can aim for higher profits using moderate leverage, like 5x to 10x, without putting up massive amounts of base capital. Third, risk control. It intelligently uses isolated margin to limit the risk of one bad trade, wiping out your whole futures balance. Or it uses cross margin, but with its own intelligent management logic to calculate risk dynamically and cut positions to avoid liquidation. Plus, it does intelligent real-time margin management. The AI watches your available margin, volume, drawdown, liquidity, and adjusts its own behavior, reducing exposure if needed. And it even gives adaptive recommendations. Suggest isolated margin in high volatility, maybe chronic margin in strong trends. It really tries to provide a safety net, even in that high-stakes futures environment.
Okay, let's try to ground this with a realistic simulation. Picture this. $1,000 USDT. You've got a prime DOT license that means unlimited operations. You choose Rocky Trader mode, MIO at 20%, MOA at 3. Futures mode, 5x leverage, cross margin. Right, here's how it might play out. Dexpro spots 3 chances, Celestit, Linkus DT, AVAX USDT. It sees your $1,000 balance, MIO is 20%, so that's $200 per trade. MOA is 3, so it opens all 3 in parallel. Uses 5x leverage, so each $200 trade controls $1,000 exposure, 200 by 5. Total market exposure, $3,000, $1,000 by 3. Total real capital invested, $600, 200 by 3. Target profit range for Rocky Trader is maybe plus 1.2% to plus 3.5% per trade. Take profit is handled automatically by the AI. As soon as one trade closes, that $200 is ready for the next opportunity. So what did the simulation show for results?
$200 invested, $1,000 leverage exposure hits, plus 2.5% gain. That's $25 real profit.
Same setup, plus 1.8% gain, $18 real profit.
Same setup, plus 3.0% gain, $30 real profit.
So the total gain from just one round of these 3 trades, 73 USDT, and the estimated time for this, maybe just 2 to 3 hours. Now imagine that happening multiple times a day. That's where it gets really interesting.
Right, but that simulation also lets us look at the leverage trade-off using their impact table. For that $600 real capital, at 3x leverage, you had $1,800 exposure, maybe $40, $55 gain, low liquidation risk. At 5x, our example, $3,000 exposure, $60, $80 gain, medium risk, but jumped to 10x. $6,000 exposure, maybe $120, $150 gain, but high liquidation risk.
So how does Dexpro help you navigate this? Well, by automatically adjusting MIO and volatility and giving those specific MIO recommendations for leverage, it's trying to balance that hunger for higher returns with solid risk management. So summing up the advantages from that example, especially with a prime license: unlimited operations, no restrictions holding you back; multi-level intelligence, finding chances, managing capital, spreading risk with those entry levels; efficient capital reutilization, money goes right back to work; the Rocky trader analysis providing balanced trades; automated risk control via MIO, and compatibility with pretty much any futures pair. Okay, broadening out now to the general strategic advantages of using Dexpro overall. It's 100% automated. Set it up, let it run. Millisec. Reaction under 1 second execution. Compatible with multiple exchanges: Binance, KuCoin, OKX, Kraken, Bybit, HTX listed. Claims sustained profitability, aiming for 0.4% to 2.5% per successful trade, real margin in good conditions. Total adaptability to market type. That intelligent hibernation mode to sit out bad markets. Scalable from small accounts, $50 up to large ones, $50,000. You get automatic performance reports, continuous optimization via background updates, and integration with premium signals for higher tiers.
Yeah, if you put Dexpros side by side with more standard bots, the differences are pretty stark. Execution speed, ultra-fast ones versus maybe 3-6 seconds. Risk management, dynamic and intelligent versus often static or manual. Autonomy, 100% autonomous versus often needing supervision. Market adaptation, automatic versus limited. Features like active hibernation are often just not there in standard bots. It really highlights the kind of leap in sophistication Dexpro aims for. It's like comparing a basic cruise control to a full self-driving system almost.
And for anyone thinking about using it, some general tips from the sources. It seems ideal for high volatility markets, like they mentioned the 2025-2026 bull run potential, which actually makes me wonder, given its optimization for bull cycles and volatility, how does it handle long, flat, boring periods? Or even extended bear markets? Does that aggressive logic become a problem, or does it just sit tight?
That's a fair question. And it seems to tie back to that adaptive hibernation logic. In prolonged bear markets or really flat, choppy periods, the system's goal shifts primarily to capital preservation. So it would likely drastically reduce how often it trades or fully activate that hibernation mode. It basically waits out the unfavorable conditions rather than trying to force trades where its core logic isn't best suited. Then it reactivates when things look better.
Okay, that makes sense. Capital preservation first. Other tips. Definitely use 2FA on your exchange basic security. For capital over $500, they suggest a PRO or Prime membership to get the most out of it. Maybe use the automatic hibernation on weekends if liquidity drops off. And check the weekly reports to see how it's performing and learn its patterns in different markets. So we've really dug into Dexpro Pro today. We've seen its advanced hybrid AI, the different models working together, those flexible operation levels fast, Rocky, Holder, letting you match it to your style. It's smart capital management using MIO and MOA. And its potential power, but also its safety features in the futures market.
Absolutely. The picture that emerges is Dexpro positioning itself as, well, the pinnacle of this particular bull trading bot technology. It's built for people who want 24/7 automated trading, maximum efficiency, but without giving up security or control. Its combination of adaptable intelligence, that tactical aggressiveness, and strong capital protection makes it a pretty formidable system. And it definitely makes you think, what's next? What does the future of automated trading look like if systems like this keep evolving?
Yeah, it really does. So if you're looking for ways to potentially multiply gains without being glued to a screen, Dexpro is presented as this kind of new financial intelligence partner. Even if you decide never to use a system like this, just understanding how these tools work, the AI, the risk management, the automation, can really shift your perspective on markets and investing itself. What was the biggest takeaway for you from today's deep dive? Thanks for joining us on this deep dive.